Welcome back to another episode of the Anatomy of the Trade. Today is September 17th, 2020, and in this episode, together with Franz, we are gonna go through the market update because the market is showing us very interesting price structures, and also we have quite a lot of requests to talk about the currencies, so we'll go to our usual currencies that we've discussed before, that is pound and euro against the US dollar. So let's start with our market analysis. And as you guys could see, and on the top here, and this is 8 a.m., 8:15 a.m. Pacific time. So we're still into the first part of the trading session. We just had a move down on the intraday basis. We're going to look at the intraday. And now we're seeing some buying coming in all of the indices. And when we look at the daily, yesterday's class discussion in WMD, we were talking how potential weakness could actually take us, below the support level, at least for NASDAQ and for S&P, and we had that attempt. So my first thought here is that you gotta wait until the end of the session to make a more prominent decision as to like what is your strategy at this point. Having said this, there are still some stocks that you still should be buying, and there are still some stocks that you should be trimming off in your profits just because they are showing some signs of deterioration. But definitely you should be looking at the close of what's going to happen with this session, and you also should be looking at the intraday picture. And before we go to the intraday picture, Franz, what do you see here on the daily charts for the indices?
Hi, Ramon. Well, the big question here is that I've been having is with this change of behavior that we've had off of the top, are we going to have another leg down, or are we going to consolidate here in this area and form a trading range with sort of this lower boundary staying intact? And I think that's still playing out. Just like you're saying, it's making an attempt this morning to penetrate the trading range with, obviously at this point in the day anyway, demands coming in and reversing the downtrend, and we will be looking at the intraday in a minute.
Yes, and one more note on the daily. Please note how Russell is actually holding up much better than anything else. So if I would be looking for leaders right now, I would be looking into small caps. That's number one. If I would be looking for laggards, I would be looking into NASDAQ. And not that NASDAQ is just, like a perpetual laggard. No, it's just a profit taking that is happening in this area right here and rotation into other themes. Well, let's look at the intraday picture, and we'll go to the S&P. We'll put on the 1 hour chart. So here's the whole structure. We could see that initial move to the downside, which Franz said we could label as a change of character. And then we go into the consolidation. Even though we have lower low here in middle, please note how the next low is slightly, ever slightly, is a higher low. Also, please note that we managed to come back to almost the same high, and we spent quite a lot of time doing this. So whenever I see this, I'm thinking always, during this time, there was no selling. So the price stabilized after this lower low, although the climactic action actually was here. And the whole range has kind of like this downsloping nature to it. So the key for bulls here is stopping again, and now we're stopping at the slightly higher low. Then, the character of the decline should not be very aggressive. We don't really see a lot of aggression here. We definitely see in this bar as being the most aggressive, taking us down. We have a little bit more than desirable volume during the Asian and European session. So that's still the reflection of this supply. But the ability to stop here reverse and actually rally from here, could show some temporary stabilization. Now, I'm talking about stabilization here, but on my mind is still what is the price going to do into the close of this day? As we're recording, we don't know what's going to happen. So if the price is going to hold, let's say above this level on the intraday level, there is some chance that there might be some kind of rally that is trying to develop. But if there's going to be some kind of failure, and especially failure into the lows of the session, then that becomes a much more vulnerable spot. Franz, what do you see here on the intraday in terms of the structure or labeling or any type of signs, bullish or bearish?
Well, I have an observation and I have a question for you. One of the things that we're taught in our classes is that you would like to see at least 3 touches of the support line before potentially some sort of trend can develop. So I think the way we're labeling this here, we do have it. And we've potentially even got, a phase C, that one kind of scary bar off the top. Could that be, sort of the second, the second wave of fear that we talk about coming in? So that's my first observation. It does potentially have the setup to have a little bit of a rally. So my next question is, where potentially might that rally go?
Well, I mean, if the rally is strong, and this is a big question, I mean, like, will we rally from here or not? And I just actually received an email from a student, and he was asking, well, what do you think? Are we gonna rally or not? It seems like the place, to rally. And I replied to him that, why guess? Like, don't try to guess what market's gonna do. Try to see what market is doing and follow that. So, and obviously in different time frames, this is going to be a different advice. I mean, specifically what to do at this spot. But I think the advice of like not guessing, just follow the market. Market is showing a higher low and an attempt. It is an attempt right now to rally. So if indeed we rally, where would we rally? Well, a very natural spot here, 34.20. This is where the resistance is. You could also create a little bit of a cluster. So anything between 34 and 34.50, this is kind of going to become a target. And then if we fail to reach this target, there is obviously, either more of the continuation of the consolidation itself or potential break to the downside. So the character of this rally is going to be of utmost importance in the next couple of days into the end of this week and maybe into the beginning of the next one. And we'll have to see what kind of news cycle we're going to have over the weekend. Franz, let's go through really quickly through some other intraday pictures just to see if there is any difference here. And we could see that Nasdaq is definitely weaker, and we are making actually a slightly lower low just on the intraday basis. And look how different this rally is. I mean, like, there is no lift here, and that's what's so important, is that Nasdaq is definitely having more selling as we see on each of the leg down. And that selling is just, profit taking. It's not like they're going to get rid of all of their positions in technology, but they're definitely trimming very aggressively the profits and moving it into other areas of the market. And then look at Russell in terms of the intraday picture. This is going to look, completely different.
Mm-hmm.
Franz, what do you think about Russell?
Yeah, a higher high, a higher low, just a totally different picture, like you're saying. potentially you see that higher high that you've labeled and you think, well, maybe that's an up thrust, but the behavior that you'd expect out of an up thrust would be, an aggressive sell off back down into the trading range. And all we see here is a kiss off the top of this downsloping, range that you've described with what looks like some volume coming in, some demand coming in. So, again, remains to be seen. But the other thing that we're seeing, back to your previous point about technology profits being taken in that arena, pretty significant rotation occurring. I don't think we're going to talk about that today, but we're seeing groups into buying and beginning to outperform on a pretty significant level, and they're in kind of different areas. So definitely some changes taking place right before our eyes.
Yeah, I like this picture with Russell. I mean, like, obviously, this is the most bullish picture. Again, this higher low is going to be very crucial whether this is going to be broken or not. But look at the recovery, intraday recovery of the last 3 hourly bars. We are moving back into the trading range, and we're just reacting off 1/2 of the height of the trading range. But this movement is very dynamic, aggressive, and takes us to the level of the price where, we had, some higher highs here. So very constructive, at least at this point. And again, our kind of like big remark here with the markets currently at 8:30 Pacific is that wait until they close. Do not guess what's going to happen. Just trade it based on the relative comparative strength. Trade it based on your time frame. If you're a short-time trader, then there are plenty of opportunities. There's still so much volatility that we have up and down. And then if you're more of the swing trader, then you have to be more selective. What exactly do you trade? Okay, let's go to the update on the currencies. So quite a lot of you guys are asking us, could you, in your market updates, could you include the currencies? And we've done so, so you have to go back to some of the videos and just kind of like scroll down. I think that we made a relatively good call. Well, actually a good call, right? Franz, I forgot where it was. I think somewhere here. Was it here? Yeah, or here? Yeah, the call was to the upside. And not only that, we said that the euro is going to outperform the pound. And that was a significant call. That was even, more significant than the buyer's call itself. Why? Because, well, you could be correct on the bias, but yet still be incorrect on the asset that you want to be in. So, and really quickly, just to go through it, that, call based on relative strength was just made somewhere here now that I'm remembering. So you could see how the pound is going into a spring, into a lower low before it starts moving up. Whereas euro is actually making higher low. And there is some kind of apex formation here, which suggested that the price is going to move comparatively more than the pound. And look at this first initial move. And then subsequently, you could see that the next reaction has the same type of characteristics. The pound comes back into the trading range quite significantly, almost touching the support level, whereas the euro is just resting on the resistance. So you still would have to be consistent with your relative outperformance strategy and go into euro at this point. At some point, you start seeing that euro is a little bit becoming weaker at this point right here, and pound is holding much better. So the last leg of this rally, or rather, the last leg of the trading range, you want to be in the GBP in the cable if you are trading intraday. All right, well, Franz, that was all in the past. So now we are, obviously with this big reaction in the pound, we are in the trading range for the euro. So how do you approach this analysis? I mean, just looking where we are, What are the thoughts that you have?
Can we break this down into some sort of a Wyckoff structure and make an analysis based on that? And to me, I would look at, after the big drop, the COVID drop, I would look at that area going forward and try to make a determination on what we've got here. When I look at the pound, just looking at this whole structure from kind of April through where we are now, it almost looks like, you know, an accumulation pattern going through with a phase D that takes us up into a sign of strength, almost a major sign of strength, going back quite a distance. And then we're getting some backing up action that may be setting the stage for, you know, another, you know, more strength. And somewhat similar, although it's a little bit more stair-stepping reaccumulation as far as euro goes, potentially. But I'm not a currency trader, so I'm just looking at the chart and seeing what I'm seeing. So you can take it from there.
Well, yeah, I would concur that we definitely seen a lot of strength. Well, on a very global basis, how do we see that strength? Well, look at this decline. Look at this decline. And then think what happens afterwards. I mean, like if we are in the downtrend, and we're looking for some elements of strength, what would we be looking for? Well, we would be looking for some kind of climactic conclusion of the downtrend. So here is that climactic conclusion. Then we would be looking for some testing. There is definitely a lot of testing that's going on in both cases, you know, at different price levels. Then we would be looking for something different than the previous downtrend. And that something different is the change of behavior. It's just basically the price behaving differently than before in the downtrend. And we see that the latest rallies suggest exactly that. So then comes a much more difficult point, because if we have established some kind of uptrend, it doesn't really mean that, you know, we are done with, you know, more of the consolidating action and more of the accumulation, or more of the retesting of the lows. We could easily here, you know, just go down and retest some of the lower levels. Now, I want to talk about this from the perspective of the analogs. I think that we're at the spot where it would make a lot of sense to use the past price action to define what kind of failure or continuation we're going to have. And if you would look at the euro trading range that we have currently, I would be thinking about some analogs that came before, where the price either have failed or it continued to go up. So to me, it looks like in euro we could see this type of analog. And we could see that with this analog, we have some lower highs first, going into apex, and then a break and a failure. And after that failure, it's very consistent downtrend. So you could find intraday point of entries to, to go with the whole trend to the downside. So if this to happen, how would that look? Well, definitely just a continuation to the downside, and then somewhere here there could be a break. How would that look to the upside? Well, we have this trading range, or this trading range for us to show us how that would look to the upside. So again, just to break up, in some instances, sign of strength, and the last reaction before the actual rise, backing up action. And we could definitely, that would be suggestive of the continuation to the upside. But again, the trend is well established, so a break would suggest at least a consolidation at minimum and some kind of reaction. And in terms of the pound, there are quite a few of those areas, so you could study those before you make some kind of decision here. Here's our current trading range. This looks either as a sign of weakness, and we need to hold this level, for this not to be a sign of weakness, or this could be a little bit of a shakeout in this larger formation. But for now, in majority of the bias definitions here, we're still in the uptrend. We have not broken the uptrend. So until it breaks, our bias is to the upside. So we will be still exploring, upside trades. And once that trend is broken, this is where we go into a different environment. First, reactionary. So we'll be looking at the short-term opportunities like this, where the trading range breaks down, like this, where the trading range breaks down, like this, where the trading range breaks down. And then you could easily establish the intraday position and then convert it into switch it into the daily position, and that could be quite beneficial. Franz, what do you think about this strategy for now?
I think it sounds great, Roman, and I think you've really pointed out that we need to wait and see what happens, and it's sort of it could go either way, and wait to see which way it goes before making at least a swing type decision. The other thing which I was thinking about is just a descriptive term that we use in talking about uptrends, the stride of the uptrend. And just from a teaching standpoint, obviously the stride of the pounds trend is significantly less dynamic, less aggressive than that of the euro so far. So clearly points out that the euro's got the relative strength over.
Yes, so euro is much stronger than the pound, and obviously this latest reaction down kind of confirms it. There is a little bit more strength just recently, where euro is just going down and the pound is going up. So again, you have to, when you trade pairs, you have to think about how correlated the pairs are, and that correlation could change, as you could see. I mean, for instance, on the way down and in the first reaction down, we are highly correlated. We are highly correlated, throughout. But once you see that correlation is sustainable, and it wasn't, let's say, maybe during like these periods, but you still can use your relative comparative analysis and pick the ones that are appropriate for the bias. Pick the strongest if the bias is bullish, and pick the weakest if the bias is bearish. All right. Well, Franz, I think that's it for today. Any final thoughts?
I think it's been a great discussion, Roman. Thanks a lot. I've always learned something when I participate in these with you.
Well, sounds great, and thank you so much, guys. We will see you next week on another episode of the Anatomy of the Trade. Happy trading.